Hey, it's Thanksgiving week here, CJ.
Hey,
You know what
happy.
that means?
Yeah. Well, lots of things, Tom, right? How is Thanksgiving? How are the Thanksgiving plannings going at the Gentile household today?
Not so good, man. No
No?
good. And I'll tell you why. So we went to Costco over the weekend and bought a bunch of food.
Mhm.
And I, we have an Italian family here. That means that the more refrigerators you have, the higher on the totem pole you are. So anyway, so we got we stocked the fridges, and we have a drink fridge, and then we have these are some extras, and then we have a fridge where we put in all the meat and
Mhm.
the fish and the chicken, and those double French doors that got that little lip that goes down the middle that closes them. Sometimes that lip gets stuck.
Uh-huh.
Well, sometime the night so here we are. It's Sunday night. Somebody went into the fridge. We don't know who. Apparently, I'm the one that's in trouble because if there's anything goes wrong with this house, I'm the one that gets in trouble.
Right.
So anyway, someone forgot to close the refrigerator, and the lip kept that big gap open in the French doors.
Oh
Anyway,
no.
all the fish, all the meat, all the chicken, all the pork, no good. Walked in the garage, and you got that nice smell of rotting carcass. And so,
Uh,
anyway, yeah, my wife come running in. I was doing a video in my office, and earlier in the week, she comes running in and goes like this, and I'm like, I don't need this. And so I hit pause, and she says, tell me that you just went to the refrigerator and opened it and forgot to close the door. I go, I ain't been in the refrigerator since yesterday when we put all that food in. She goes, it's
oh.
spoiled. And I'm like, oh man. So guess what we get to do? We get to go to Costco again. I get to stand in line for another hour because everybody was there over the weekend. What do you think everybody's going to be there like today, like huge, as it
I
is the day before Thanksgiving?
I think it's going to be packed. I'm looking at Costco at $580 a share, and I'm thinking that I'm going to buy some more just based on the fact that that story is going to put more sales in their pocket. And no, I do
Oh
think it's going to
man.
be packed. You know what I saw? Just keeping it on the theme of Thanksgiving, I saw that the Costco pumpkin pie was voted the best pumpkin pie out of Kroger's, Publix, Trader Joe's, BJ Wholesaler, and I think they had like a Target in there as well. So it was the best pie, and it was also the cheapest at $5.
Huh.
Yeah.
Well, you know what? Before we get into what we're going to discuss
Uh-huh.
on today's Thanksgiving week, short trading week, about to take a 4-day weekend because that's what you and I do. I mean, we as traders, we live for a few things. We love doing what we do. We love teaching what we know, and we love taking those holidays off.
Ooh, love the half day. I
So
mean, the half day trading is basically, as you know, the whole day. I've got a question about that when we close things up that'll, I think, help people out there that might think about trading on Friday. I got a
mhm.
question for you in your experience, but we'll get to that. But yeah, love the half day of trading.
Yeah, I do too. And even better than the half day is the next day when we're completely, when
Yep.
we're completely shut down.
Yep.
Um,
Uh-oh. There he is.
disappearing act.
I kind of just sat here and looked around for a minute and went, "Uh-oh."
Yeah, yeah.
Yeah.
That's another story. New computer. So when I was ready to present
Uh-huh.
the screen, which I want to talk about because we want to look at some stuff, some charts and things.
Right.
It went ahead and kicked me out and needed to do a reboot.
Uh,
So hey, that's what live podcasting all is all about. And you know what, Chris? I would be remiss if I went ahead and edited that out. So I'm not going to.
good. Good. Let people look at me do I'll give you a replay. Uh-oh.
All right. So anyway, I'm going to bring up a few charts.
Okay.
And so let me try to share my screen one more time with everybody. And here we go. And so the first thing I wanted to do is I want to look at Costco. So I want to look at a 100-day chart of COST. And I bring that up because you're absolutely right, my friend. Look at the direction this thing's going in.
Yeah.
I mean, you know what? It had a little bit of wiggle during the summer months, but boy, coming out of October, we've gone from 545. We almost hit 600 before pulling back a bit. Now they've got earnings coming out in 23 days. What do you think Costco is going to be doing in terms of earnings? I mean, they typically beat, but it's not just beating anymore. You know, they've got to really beat, and then they've got to just talk about how great that outlook is if they want to continue to see higher lows and higher highs. You think so?
I do. I think Costco is one of those most interesting retailers out there, Tom. When you look at it, are they really a retailer? I mean, I know the answer is yes, but it's almost like it's turned into a consumer staples company like Procter and Gamble or Colgate Palmolive. I mean, we march, and by we, I mean me and you and everybody else, it feels like we march there almost on a scheduled basis. And we stand in line, as you said, for an hour. And there's a reason. It's because they've got a fantastic operation. They've got good prices. They still make good margins. I look at this company, I just think it's a steady eddy of retailers. And this retail earnings season, we haven't talked about it. It has been volatile. You've got Burlington Coat Factory that goes up 30%, Gap stores that goes up 30%, Target that goes up 20%. And then you've got companies that have gone down 10 and 15%. Best Buy, which I think Costco is stealing their business in terms of electronics.
Yeah.
Best Buy is disappointing, you know? So I think Costco, when 23 days from now, we're going to look at this and said, yeah, they did it again. And we know exactly why. It's a machine, right?
It is.
It's like Apple for retailers.
You know, we haven't even gotten into, we're already 7 minutes in. We haven't even gotten into what we want to cover today, but we're going to talk OpenAI. We're going to talk about the home building wars between Home Depot and Lowe's. And then I want to end this podcast talking about some notable options. And I think this is going to be really interesting because there are some options now that are very cheap on the world's most popular stocks. And this doesn't always happen, but I want to show everybody what's cheap right now. And we'll get to that before the close. But let's start off with probably the biggest news story that happened this weekend. And, you know, we sat around the table as we watched Sam Altman get the kibosh over at OpenAI.
Yeah.
Only to get hired by Microsoft. This was started on Friday. Within 48 hours, he'd already got himself a job over at Microsoft. What is it? 90% of the company is basically threatening to walk if they don't already have jobs. Unless the board resigns and they name a couple members to an independent a couple of independent parties to the board. The president left. He's now got a job at Microsoft. I mean, you know, and you look at what happened with the market carnage afterwards. Okay, so let's take a look at, I think, the company that's going to be the most volatile to this, and that is Microsoft. Here's a 50-day chart of Microsoft right now. And during this 50-day time period, the low was 310. You can see it right down here. That was the end of September. The high was just yesterday at 377.44. Now, the news came out over the weekend, and I honestly thought that Microsoft was going to take a big nosedive. And yet, Satya was able to cut a deal and come out and say, no, all's good. We got this guy now. We got his president, and we'll take any of the employees that we want to. And all of a sudden, Microsoft jumps higher. But I also think that, you know, there's the cat's out of the bag now. It's like all of a sudden, all the intellectual property is like cockroaching around the kitchen of the industry, which means Google has a chance to catch up. Salesforce has a chance to catch up, and every other tech company and fintech company has a chance to catch up because all of a sudden, all these open AI people they're going to flee. They're going
Right.
to flee. Unless they were to bring Sam Altman back and everything were to revert back to where it was last week, this company is, I think it could be dead on arrival. It could become, Microsoft could buy the other 45% at a
Yep.
discount. And I think that would be the smart thing to do, is if Microsoft were somehow able to seal the cookie jar before all the cookies get out and go to other companies.
Yeah, you know what's interesting here, and this is maybe the conspiracy theorist in me coming out, Tom, but you've seen the CEO of Microsoft. I always butcher the name, so I'm just going to say the CEO of Microsoft. You've seen him come out and say, first of all, we're going to hire Sam Altman, and then immediately come out and say, hey, we really do need some more oversight, or we need to get things nailed down in terms of oversight on AI, and then come back and say, hey, we're open to Sam Altman going back to OpenAI. So there's something going on here that you and I don't. I mean, it's just a weird little dance that's happened over the last 3 or 4 days, and I wonder, what it means for the entire industry of AI
Yeah.
right now. I mean, is this one of those things where they know where AI is going and maybe want to curb a few things? But you're right. This could be a crown jewel for Microsoft in the end, if they kind of batten down the hatches and say, let's just get this deal done and
It could
take
be,
everything inside.
the other thing too is this could fall on their face a little bit. And what I mean by that is that, OpenAI said they had 100 million users.
Yeah.
100 million users. Really? I mean, if they exaggerated those numbers a little bit, they wouldn't be the first company to ever do that.
Nope.
So, I look at that and I think, all right, you know, even if they said they had 100 million or they had 100 million, I think they had 100 million unique views. I think most people looked at OpenAI and they're like, what do I do with this? I
Yeah.
don't do anything with this. I'm going to go back to Google. The cavemen in most of us are not ready for OpenAI yet, or are not ready for what artificial intelligence brings. We will be eventually, but it has to be dummied down more. But anyway, I believe 100 million unique viewers. I believe, maybe 10% of that might be trying to figure out a way to use it, and most of those are businesses. So where I'm going with this is it possible that this is finally a sell the news piece for Microsoft? And could Microsoft revert back to $350 a share, which is where it was before any of this began?
Well, if it does, let me ask the big question. And I think the answer is yes. If it does, are you a buyer at 350?
I will come out and tell and let you know that I sold my Microsoft position before all this happened.
Really?
Right?
Okay.
I sold my Microsoft position because I had a good run on it. I pulled back. Where would I be a buyer? Maybe down around 300, because 300 is a very, it's a round number support level.
Love it.
But we'd have to do a lot to get down there too.
Yeah.
So for me, I'm kind of in that situation now where I do have options on a sister stock, which is NVIDIA.
Hot name, hot name.
NVIDIA, so that's a completely different situation. I'm not a long-term holder of NVIDIA. What I am, I can't take that. I do have stock in NVIDIA, but it's a very small position. But I do have options because of the earnings that are coming out. Because, if you take a look at, and let me put a chart of NVDA on the screen, and so everyone can see what I'm talking about here. Here's what's going on with NVIDIA. Nice climb into earnings. And we are going to be releasing earnings. And so we're ahead here. It's going to happen after this podcast. So we're going to release earnings. And what I'm doing is the number one thing I'm interested in right now, CJ, and I'm going to bring it up on the screen real quick, is the implied volatility. All right. So I have short-term call options. These are call options that expire this week. All right. Mm-hmm. Look what the red line, which this is basically the option traders all climbing in. And so even though we're down today, but look at the implied volatility, it's gone up even more. And so what I do is I look at that and say, well, what did it look like the last time earnings came out? How high did it climb then? And so I'll get a quick estimation. And here's where we were before the last quarter's earnings. We got all the way up here into around 90 or 95. Now we're at 70 right now. We might climb up a little bit more, but I don't see this going all the way up here by the end of the trading day today before earnings come out. There would have to be something catastrophic that would happen for that to come up. But I have taken a ride on the IV Express train, and I plan on getting out of the IV Express train before the close of business, before NVIDIA announces its earnings, because I don't want to go. That, to me, that's the riskiest time to be involved in a company like NVIDIA. And I might be wrong, but you know what? I'd rather take the IV and the more conservative play than going forward.
I'm with you on that. I'm with
All
you
right.
on that. Especially that, and that chart is interesting to me, Tom. Those viewers or listeners that maybe don't follow implieds as closely as you and I do, man, that implied getting up to almost a 90 or 100 at their last earnings. Those implieds imply uncertainty or unknown, right?
They do.
I mean, that window is opened up for how wide NVIDIA is going to trade, higher or lower, after the earnings announcement. It being so much lower at a 70 read this time around, is that part of maybe everybody saying, yeah, we're not worried about NVIDIA? We're not.
No, I think what's happened is you've seen in the last month a rise in this stock, and typically when stocks go up, implied volatility goes down. So that's helping to curb this, and it's not sitting at a 75. And I also think that, I mean, people know this is going to be a blowout quarter,
Right?
Are they going to miss? Are they going to beat? They're going to have a big number.
Yeah.
It's just that now, because of what happened last quarter, that's all kind of been factored in. So that's also putting a damper on implied volatility. But if you look in the last 2 weeks, IV has shot up from, say, 50 to 70. That's still a 40% increase in implied volatility in 2 weeks. So, if you're an option buyer, then you're making out pretty good.
Yeah.
So
absolutely. Great chart.
Right, so so we see the war going on here between the option buyers and the option sellers. Let's get to a different war. And the war I'm talking about is it's not the war on drugs. It's the war on home building stocks. So you brought this up. You said we need to talk about this. What's going on?
Well, we've talked about the retail sector here for the last couple of weeks, or at least the market has got itself whipped up into a frenzy, and interest rates coming down. Everybody's happy about that. CPI and PPI were, cooler than expected, so we're seeing rates pull back. And the implication there is that, all right, everybody's going to get busy buying things and doing all of this again. If you look, and Tom, one of these stocks I think our viewers all know is very near and dear to your heart. If you look at the difference between Home Depot and Lowe's over the last, I think, 10 days, let's call it trading days. These are two stocks that seemingly, if you put them next to each other, the stores, they're the same store. I mean, I exchange one for the other all the time. If the Home Depot's too busy, I'll drive 2 blocks over to the Lowe's. It's kind of like McDonald's and Wendy's, I'm going to drive to the other one because it's right down the street and it's got a shorter line, and the reverse is true. But here, where you listen to the earnings this time around, there was a different message, and it has everything, I think, to do with the consumer, which is, we've been getting some rumblings about the consumer slowing down and pulling back. We're still a little, shy. Here's the deal, Tom. Home Depot came out and said, earnings better than expected, and our outlook is good. Lowe's came out and said, earnings are and our outlook is not as good. The difference between the two, and if you pull into one of the stores, you'll know this. Home Depot rents equipment. Home Depot has a contractor's desk. Home Depot services the home building industry much more. About 70 to 75% of their revenue comes from professionals, not you and I and the DIYers, right? If you look at the other side of the road, or a couple blocks down, there's no tool rental at Lowe's. They don't have the contractors. That's because they are the DIY store. So I think the combination, or let's say the images of the two right now, speak starkly about what we're seeing in the retail sector about the our activity.
It's funny you're spot on. And I'll tell you why. When I think of needing a tool, and I got a few on the farm, but then if
Uh-huh.
I need something real quick, I don't think twice. I'll go rent it at Home Depot. But
Yeah.
when I need a golf cart or a quad or something
Yeah.
to race around, Lowe's sells these things. They're
Yeah.
out of the front door. I'm like,
Yep.
yeah, okay, I'll take that. I'll take that side by side.
Yeah.
And so that's great. But side by sides don't make the kind of money
Mm-mm.
that a tractor or a skid loader. It is amazing the kind of stuff that you can rent at Home Depot. And
Oh
so
yeah.
it's funny because I've watched this company go from they founded their company on the do-it-yourselfer, and they realized that especially in geographically, there were some areas that they were going to make more money, that they were going to expand, and they were going to grab more market share by going into by hitting the pros.
Yeah.
And they did. And I think that if you take a look at the chart here, traders kind of figured that out. This is a 50-day chart of Home Depot and Lowe's. Home Depot is colored in red and green candles, and Lowe's is the black and white candles. As you can see, they started to widen out, getting out of summer, coming into fall, and the distance between these two stocks just got wider and wider and wider still. Now, what's interesting is when Home Depot announced its earnings last week, you had both a gap up in Home Depot's and a gap up in Lowe's. Lowe's reacted favorably to Home Depot's earnings. Now, when Lowe's reported earnings and they had a little bit of a miss here, they gapped down.
Yep.
And Home Depot came down a little bit too, but it wasn't much of a gap. But you're seeing the two of these widen more and more, which is, there's several different stories here, but I think the biggest one is, what is the retail consumer buying and what is the pro buying? And you'd think if we really were in a recession, what are the pros doing? They're doing two things. They're remodeling, but then your big pros are the ones that are building subdivisions.
Oh yeah.
Building communities. And Home Depot's got accounts with these guys, with the Lennars, with the John Cannons, D.R. Hortons. These guys have accounts with these folks, or at least their subcontractors do.
Right.
And so, so it definitely has made a lot of it's made a lot of headway. All right. So OpenAI, we talked about. Homebuilding Wars. And before we move off of Homebuilding Wars, which of these do you like? Either of these as a buyer, a seller, or what do you think?
I do prefer Home Depot here. Seasonality kicks in for Home Depot usually when you hit February, because we all start thinking about, and they get DIYers, but you also have a lot of those outdoor contractors that start getting ready to go out and work. The thing that I think is interesting here, Tom, and we always like to try to educate people. We talk about going long and short stocks and all of this, but this might be one of those opportunities, and maybe we put a pin in this for a later discussion, for what we refer to as a paired trade, where you actually go long one and short the other. Maybe we educate people one day on that, the idea of a paired trade. But yeah, I do like Home Depot as we look forward to 2024 kicking out.
So as you're talking, I'm just kind of playing around here. Actually, Home Depot has a really nice seasonal pattern. It starts this week, starts right after Thanksgiving, and runs all the way through to the end of December.
Nice.
Out of the last 10 years, this stock has moved higher. There was 2 years, 2019 and 2020, where it didn't move so much. The big move in Home Depot, though, I mean, that was back, 2014, 15, 16, 17. They had big moves in December. Not so much right now. So I'm kind of still in agreement with you that you wait until after the new year. You start, if you really want to lean into it, thinking about spring has sprung, and the market's always ahead a little bit. But there you go. All right. So I want to end by doing something that I haven't done on this program, at least in some time. And that is, I want to show everybody this is something I call the morning report. We look at this every day, but this has gotten interesting. On the left-hand side are the expensive optionables. That is your Kohl's, your AEO, Compaq. There's Nordstrom on here. Best Buy is on here. Burlington, Abercrombie and Fitch, Dollar Tree. I mean, the majorities are all retailers. And the reason why they're on the expensive side is because these are still yet to report earnings. But look at what's on the the right-hand side. Look at what's on the right-hand side. Apple, Amazon, Alibaba, Google, Meta. I mean, these are, and your top four right here.
Got four of the Magnificent Seven there, right? Yeah.
There's your cheap play right there. Cheap, 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 cheap. I mean, 5 of these top 10 are, in that tech area. Alibaba is the only one that's a little bit of an outlier, and that's because, Chinese company. But still, I mean, look at Apple's implied volatility. The high in the last year was 42. The low in the last year, 1698. That happens to be today's IV.
Wow.
Apple's options are very cheap. Same thing with Amazon. They're on 1-year lows right now. Same thing with Alibaba. Same thing with Google. Same thing with Meta. These 5 stocks, if you are bullish on them, all right, if you're bullish on them going into the holiday season, guess what? There's never been a better time in the last year to buy call options or buy spreads, because the time value is, it took a vacation. It took a holiday. And so, but then I'm going to mention this too. If you're bearish on Apple or Amazon or Alibaba or Google or Meta, there's never been a better time to buy puts. If you own Apple, Microsoft, Amazon, Google, Meta, and you want protection on that stock, there's never been a better time in the last year to buy protection, because this number right here just tells me in the last year that implied volatility, you equate that down the time value on the at-the-money options are as cheap as they've been in a year.
That is an awesome way. I mean, an awesome way to look at it, especially if the last couple of weeks, you and I have been talking a lot about seasonality, and you just mentioned it with Home Depot, but that applies to the rest of the market.
Yeah.
If we're ready to see a little bit of a pop or a run into December and implieds are low, wow. I mean, that's great information. That really is.
Yeah. All right, my man. Well, don't stuff yourself too much over the holiday season.
I've got a brand
new pair. Get back here and do another one of these next week.
Yeah, I've got a brand new pair of those daily joggers everybody's wearing with the elastic waistband, the Lululemon type of thing. So I'm ready for the bring Thanksgiving on. I'm here. I'm ready to go.
Awesome.
I hope you have a great Thanksgiving with your family, Tom. Enjoy.
I hope you do too. And I hope all of you that are watching our podcasts have yourself a great Thanksgiving holiday. Enjoy the time off with friends and family. We'll be back here again next week, and we're going to be talking about the calendar for December, the Santa Claus rally, if there even is one, and much more. All right. Have a great one, folks. We'll see you soon. Bye, everyone.